Good morning, everyone. Steve Ankerstar here, and thank you so much for listening in to the morning update. We are going to talk about three things today. We're going to first of all talk about where we are on the markets after last week's sell-off and have a little bit of a bounce coming this morning. We'll talk about where we're going for the next of the quarter/year. We're going to talk about Fitch's downgrade of the U.S. last Thursday, as well as Amazon's earnings last Thursday, where they crushed earnings and were up huge on Friday. Before we begin, though, so financial education presentation, not a personalized presentation for your situation. So do your own due diligence. More information is available at ankerstarwealth.com. Now let's go ahead and get started talking about where we are in the markets. Last week was a significantly down week, the worst down week we've had since March. And we're bouncing a little bit this morning. So here are the market futures going into the open here in about 18 minutes. Last week, though, coming off the losing week, the NASDAQ was down. Bring it up here for you. 2.9% and S&P down 2.3%. So when you think about the whole year, the year has been up. We finally had our rate pause in the second quarter of 2023. Then we had another rate hike, which didn't really affect markets too much, but then we had that downgrade last week. So there's a lot of things going on. So why'd the market sell off? Well, some of that's just reversion to the mean, right? When things go straight up for months, you do end up with a bad month or a bad week, sort of thing. So a little bit of sell off there just due to mean reversion. Secondly, the downgrade, and then thirdly, the rate hike. That was 25 basis points, so not the end of the world, but it's kind of does bring into question, when is the Fed actually going to stop? So there's good inflation numbers, bad job numbers, they'll factor all that in. So we shall see. But overall, I would not be surprised to see August end up as a down month based off of the start we've had for the first week. So I think it'll go up from here, but it'll just kind of creep up and probably not get back to even to where it was at the beginning of the month, just a few days ago. So temper your expectations in August. Is generally, if you look at all 12 months, August is the least performing month of them all. So, you got that factored in there too. People are finishing up their family vacations and getting back into school, that sort of thing. So overall, kind of a muted outlook for the month of August, but like where things are going, because the Fed is about done with raising rates, or they are done, which means the markets go higher from there. All right, next topic. This downgrade that Fitch had came out on Thursday, and this was the article. Was very important. Mark, let's get his name right here. Schoaf reached out of the. I'd met him a little over a year ago, and actually about 8 months ago. And I said, he was looking for sources, and I said I'd love to help. And he was, well, I'll call you out of the clear blue someday, and he did. So there was a phone call response about 15 minutes later, and then this article came out same day. So overall, pretty cool. I like that, and hopefully earned his respect and get some more opportunities for that down the road. And I do have this whole home studio set up in the hopes that someday, CNBC will call and want an instant response from an advisor, and I'd love to pass that on. So anyhow, we're all ready to go. We just need the phone to ring, which takes some time, and we understand that. But let's talk about the things I said so I can peel them back in a little more detail. Even if you saw this article, I didn't get to really elaborate a whole lot. So the first thing I said is, it's not telling, I'll highlight here, the downgrade is not telling us anything we didn't know already, right? So the downgrade was based on fiscal irresponsibility and continuing deterioration of the U.S. government and its ability to spend money wisely. Okay. Yeah. Has that gone on for some time? Yeah. Decades, right? I mean, so we have this huge deficit. We have a lot of issues. And my comment, the second part of it here is, it's not telling us anything we don't know, right? Because we talk about this every day. I mean, the big political channels, CNN, Fox News, battle through this every day. But I said, if the U.S. was any other country or company, that would have already been downgraded, or they would have already downgraded them. And that's what, like, if this was Canada doing this, they would not have a AAA rating if it was anybody doing it. So why do we earn our own AAA rating when we would never judge anybody else's books that way, right? So that was kind of my first point. So I was happy to see that he put that in there. Strength of the economy does overweigh this downgrade. So you heard, Warren Buffett, legends of the industry, right? Warren Buffett, Jamie Dimon all say this is a completely meaningless thing. And I say, well, it's not quite meaningless because it did happen. But will it move the markets? Probably not, but it is, I say Fitch does make valid points about the long-term fiscal deterioration of the US government. So I think when, Warren Buffett and Jamie Dimon are making those comments, I think they're thinking short-term. Will it change anything that anybody's doing right now? No. But I do think the bigger question that's out there, and especially I like talking to younger folks about this, is I don't know how this is going to end. Is it going to blow up this year? No, probably not. Right? Is it going to blow up next year? Probably not. But there's a problem with that thinking, in that there is a day when it will blow up. Right? And that day, every day that goes by, is we're one step closer to whenever that day actually is. And it's kind of seems like either it's never going to happen. People think it's never going to happen, or it's not their problem, right? It's somebody else's problem. Well, that doesn't mean it ceases to become a problem. So the problem is there, and it needs to be addressed, and that's kind of not happening. So that was my point of making that, the fiscal deterioration comment is it's valid. Something does need to happen. I often say, I like the term adulting, or adults in the room. I don't know that we have adults in the room in politics. I don't know that those adults will ever return to politics after the recent series of events, if you will. I don't know, but it's not going away. I thought it was a good move on Fitch's part. I don't think it's completely irrelevant, but it probably won't affect our money now. However, you think long term, what if we continue to downgrade the US government? If US treasuries are no longer the safe haven of the world, would that cause us problems? Yes, that would cause us tremendous problems. So we don't want that to happen. So if anything, this is a warning shot, and maybe we learn from it and take some action at the political level. That remains to be seen. All right, last thing I said there is, if the economy stays strong, we're going to remain long. I mean, that's not the most insightful comment from an asset manager, other than it's catchy and it rhymes. But yeah, I mean, this whole investing thing is based on the economy, not based on ratings per se. It's really how we're doing, and right now the U.S. is doing great. And we dealt with the inflation thing. We survived the interest rate increases better than literally we ever have. So we shall see. I mean, problems always await, so it's not like it's clear sailing for a decade, but overall we're back to being ourselves. So overall, that's what I had for the article and the downgrade. All right, last thing I'll talk about here is Amazon jumped up huge on Friday based off the earnings after the bell on Thursday. Amazon and Apple both released at the same time. So since those are our two of the three top biggest holdings, that's kind of a hold your breath moment for an asset manager. So you always like to see good news. Apple's was a little bit muted. They needed a perfect quarter to kind of go higher. They had a really good quarter, but the expectation of perfection has a cost, right? That means things need to be perfect for things to go higher, and it didn't. But Amazon reported again their biggest profit since 2020, which COVID, right, where everybody's relying on Amazon to bring everything to the door because we couldn't leave the house. We're all going to die, if you remember those days. But when you really look at Amazon's earnings, they're pretty amazing. Cloud revenue surged. That's a great, an amazing source of revenue, right? So overall, when you look at where we are on the chart, this is let's go to a 6-month chart. You can see a pretty big move up so far this year, and we get the exact number, right? 66% year to date, and it's going higher. And I really don't see a competitor. I really don't see a reason that it's not going to continue to rock higher. It's Amazon, and I mean, you could say Alibaba's a competitor. Not really. I don't know. I think they're going to continue to rock and roll and make good decisions and really print money. So that's all I have for today. Thank you so much for checking us out. Please submit your questions to ankerstarwealth.com or the VIP services email. And with that, we will talk to you next time. Bye.